Okay, it did happen in the end. XRP has now crossed a line that changes everything. It's real now. Grayscale's multi-crypto exchange-traded product has been approved by the SEC, and guess what? Just below Bitcoin, Ethereum, Solana, and Cardano are XRP. They are all in the same basket. That means the gates are really open, not just some cracked open. If you have XRP right now, you're about to see what happens when Wall Street money meets a system that can send money around the world in seconds. It was like taking the cork out of a champagne bottle when the first Bitcoin ETF was passed years ago. There are retirement funds, family offices, and hedge funds. All of a sudden, they had a legal way to get a piece of Bitcoin's price without having to touch wallets, secret keys, or exchanges. A huge amount of money poured into space after that easy approval. What's the best thing about this? ETFs do more than just follow numbers. They have to get the assets that back up the bonds. That's right. Every time money moves into those funds, there is real buying pressure on the coins themselves. Now, we both look at each other at the same time. This time, though, XRP is inside. That means that banks can step in officially, cleanly, and with huge amounts of money. They don't have to worry about custody problems or following the rules. They just buy the fund, which is needed to keep their exposure to XRP. That's the sound. That's money flow. That's the market. The world's largest money sources give it to them. I remember when XRP was less than 20 cents. Back then, you had to deal with lawsuits, confusion, and never-ending doubt from the majority. But this is where we are. Ripple fought the court cases. XRP didn't move. Right now, it's being brought up to the same level of discussion as the top layer 1 giants. You know how strange this is if you've been here since the beginning. If this is your first time, buckle up. For this kind of change only comes around once every generation. The play is here. Wall Street comes in first. The ETF is safe and controlled, so they buy it. That makes the fund want to buy the assets that are beneath them. Ashes, Bitcoin, Ether, XRP, Solana, and ADA. As billions come in, those layer ones keep going up. Then, as the big coins go up, regular people, private investors, and buyers catch on to the trend and get in. That's when the second wave of money comes into the market, and it's not just money going into ETFs. It's also money going into direct stocks. After that, alt season starts. Smaller projects that aren't getting enough attention can grow 5, 10, or even 20 times in just a few months. I've been through this before. In 2017, I saw a small investment of 4 figures in one project grow into 7 figures in less than a year. That isn't an idea. That's what happens when things start moving faster. And the acceptance of XRP in this fund is what starts the next cycle. Let's be honest about something. The price of XRP hasn't gone through huge price jumps like other coins have in the past. That's for a reason. Ripple has a plan for when to release escrow. A certain amount of XRP is released every month, and Ripple sells or gives it to institutions, banks, funds, or the market in a planned way. That supply has kept the explosive upward trend in check. But give it some thought. Who has been buying that amount? It hasn't been little fish. Big names are the ones who see long-term promise. Now that ETFs have been approved, that lid doesn't hold back demand. It feeds it because the buyers on the other side aren't just guessing. They're Wall Street, and they have all the money in the world. The key that most people miss is this. The asset will be seen as legitimate by everyone once banks are given away to access XRP. You're no longer the strange guy holding a speculative ticket. You're ahead of the curve because you're investing in an asset that banks, governments, and now controlled funds are all going after. Like most people thought that would never happen, but it did. If you're watching this and haven't tried crypto yet, I have something to tell you. A small introduction can change the way you think about money for good. It's not about putting all your money into it. It's about getting in early, learning how the system works, and being a part of the first wave before everyone else figures out what's going on. Your starting amount can be $100, $50, or any amount that feels right to you. Now let's talk about what comes next. This kind of news, approval of an ETF or entry for institutions, doesn't send prices through the roof right away. It starts a chain of events that happen. First, it's talked about in the business news. After that, experts begin to write about it. They then talk about it in meetings with their clients and fund managers. The slow trickle of billions turns into a raging flow before you know it. We're going through that process right now. The market trend as a whole is also at an interesting point right now. These days, altcoins have been crushed. All prices are lower than they were at their highest points. It has been a sad mood. That's what you need before a launchpad moment like this one. Why? It means you buy things when they are cheap instead of when everyone is yelling about new all-time highs. If you know about cycles, you know that the best way to get rich is to get in when everyone else is scared and get out when everyone else is hungry. We're now at that scary point, and acceptance of ETFs is what turns the mood around. Think about when to do it. This fund is going to be in a lot of news over the next few weeks. Big people will talk about how the market can now get regulated exposure to XRP on CNBC, Bloomberg, and financial podcasts. A steady stream of news attracts both individual investors and companies that are on the fence. It also builds momentum like a snowball rolling downhill. It gets bigger as it rolls on. When you add in XRP's unique use cases, lightning fast transaction speeds, very low fees, and the ability to quickly move digital assets and stablecoins, it's not just hype. It makes sense. It has already been tried, used, and partnered with by governments, banks, and businesses. Now the investment side is getting caught up. There it is, the perfect storm. Let's look into this more. Take a step back and look at the bigger picture of the crypto market to really understand what's going on with XRP right now. There is a beat to every cycle. Bitcoin is the first step because it's the way in. Retailers and banks both see it as the top product, the digital cash. Bitcoin's base is strengthened when more money comes into the market. Then, when Bitcoin stops moving or slows down, that cash starts to flow into big layer ones. Ethereum is usually the first, but this time it's not. XRP, Solana, Cardano, and other main networks are ready to get a piece of that same flow, especially now that they're officially recognized by being in a controlled fund. These aren't just random codes. They're networks that make it possible for money to move around the world, and XRP is on a different path this time. Banks, payment providers, and even governments have been trying it for years, which is different from other layer ones. It doesn't just say it will be fast and scalable, it does it already. That is a very important difference. People on Wall Street aren't just betting on the new Grayscale product when they buy it. They are putting their money on the rails of the next banking system. When you think back to the 1990s, picture how the first website looked. Most people didn't understand how important networks and infrastructure would become back then. They saw the internet as something new. But companies were working behind the scenes to make everything we do today possible. That's where XRP is too. People are interested in shiny things, but the builders are working hard to solve problems that global banking has had for decades. Speed, price, and openness. Now, when big investors put money into an ETF that holds XRP, it makes two layers of demand. First, there is the direct desire for XRP, since the fund has to hold some of it. Second, there is indirect demand. When news about XRP goes around, private investors understand that it is now seen as safe to hold. That factor of legitimacy is strong. Just the change in how people think can bring in millions of new participants. But now comes the good part. Many people miss. ETFs not only increase exposure, but they also make investments more stable and flexible. When trading is more common, buyers are less likely to be scared off by big changes. The market gets older. For XRP, this means that its long-term path can become more stable, not just in short bursts, but with steady rises backed by real institutional money coming in. Let us talk about when. It usually takes a while for the effects of new crypto funds or goods to fully show up after they are released. It takes time to happen. It comes out in waves instead. The first wave is attention from the media. This is the second wave, which is institutional distribution. In the third wave, stores try to catch up. Every wave builds on the one before it. They build up exponential velocity when put together. That's why it's important to see the groundwork being laid right now, even though prices haven't gone through the roof yet. In the coming months, you'll read about pension funds spending money on these items. You'll hear that hedge funds give away small amounts of their assets. In the long run, government retirement plans and foreign organizations will do the same. All of these steps put more pressure on the limited quantity of XRP. Let's clear up something that a lot of people don't understand. The goal of XRP is not to replace traditional currencies. It's meant to connect them. It's like a jack for everything. It takes a long time and costs a lot to move money between the dollar, the euro, the yen, and dozens of other important currencies. Banks have trillions of dollars in nostro vostro accounts, which is just money that is kept in other countries so that it can be used to make payments across borders. With XRP, you don't have to do that. It lets transactions happen right away without the cost of locked cash because it acts as a bridge currency. This is what the utility companies think about. And when you pair that with an ETF that gives you safe exposure, you get a strong feedback loop. Wall Street spends because they think it will make them money. Banks adopt because they can see how well it works for them. All of that works together to make a network effect that is hard to stop once it starts. Take a look at the numbers. In just a few years, cross-border payments are expected to be worth more than $250 trillion a year. Getting even a small part of that with XRP as a bridge coin would be a huge deal. That, along with billions of dollars coming into ETFs, makes it clear why this decision is more than just another news story, is a change in the structure. And here's another view. When a new ETF comes out on the market, it means that regulations are getting better. Doubt has been one of the biggest problems with crypto acceptance for a long time. Will the government let it happen? Will the government shut it down? A lot of big money stayed away because they weren't sure what would happen. But every acceptance makes that fear less strong. With each green light, the barriers to widespread acceptance fall. Now picture yourself as a fund manager who has been looking for a safe way to get into crypto. All of a sudden, you can put money into a controlled product that has XRP in it. Care for your kids? Doesn't bother you. You do not need to worry about following the rules, not a problem at all. You only have to assign and your clients will be seen. This is really huge when you think about how many companies there are around the world that do that. But let's not forget about the investor who works alone. A lot of people didn't buy XRP for years because they didn't know how or were afraid of wallets and platforms. That problem goes away with ETFs. Like when you buy a stock or an index fund, anyone with a trading account can get the chance to do so. That makes it very easy to get to. It makes investing in things that used to seem hard or scary more accessible to everyone. The market cycle as a whole keeps going while all of this is going on. Bitcoin is first, then layer ones, and finally altcoins take off. This time, though, XRP isn't just following along, it's in charge. It has a story about its usefulness that no other coin can match. It has to do with banks, funds, and using it in the real world. That makes it very appealing to investors when the market goes up. Let's talk about instability as well. Yes, crypto changes a lot. Prices can change a lot in a short amount of time, but even when ETFs bring in money from institutions, instability doesn't go away. It gets more organized. Big money moves in cycles that are planned out, not in fits and starts. It helps make price floors stronger over time when things stay the same. For XRP, that could mean the difference between a wild ride of speculation and a stable long-term asset class. Now, this is something important to note. There are doubters in every big funding wave. People thought the internet was just a fad in the 1990s. In the early 2000s, people made fun of Amazon and said that people would never buy books online. The same doubters are still around today, still not believing in crypto and XRP. But projects that solve real problems always last longer than the noise, as history shows. It's very clear that XRP can solve problems. It is safer, cheaper, and faster to move money this way. That isn't an idea. That's the truth. So as this circle goes on, it's best to know where we are in the time frame. At this point, things are about to change. The exact time when institutional doors are opening, ETFs make exposure acceptable, and the market as a whole is cheap. That mix doesn't happen very often. It doesn't happen very often, but when it does, it leads to exponential growth. It's like a spring being pushed down. The market has been down for months. Prices have dropped. People have been feeling bad, but pressure has been building down below. Now that the ETF has been approved, that spring is beginning to come out. When it does, the speed can catch even experienced buyers off guard. The world economy is one more important issue. At the moment, we don't know what will happen. With high inflation, interest rates, and debt, established markets are not stable. When things are like this, assets that have special benefits start to move. In the same way that gold used to be a safe haven, digital investments like XRP are now becoming alternatives. And because regulated goods make them available, it's easier than ever for institutions to expand into them. What you're seeing is the coming together of many forces. Utility adoption from banks, institutional inflows from Wall Street, regulatory clarity from the SEC, and pressure from the economy as a whole are all things that are causing investors to look for other options. All of these things coming together makes it possible for XRP to play a part that has been waiting years to be played. Also, it's still early. Even though ETFs have been approved and success has been made so far, crypto as a whole is still a very small part of the world's markets. There are still trillions of dollars sitting there. Being able to use this cash is just the start of the next wave. We're only seeing the beginning of a fire right now. Even though Coinbase's strange XRP reshuffle had not yet settled, crypto enthusiasts were already talking about more than just where the coins went. They were talking about what such a big change could mean for the future of the token itself. For one reason only, they couldn't avoid the truth. You don't just move XRP worth billions of dollars around for no reason. The market had to think again about XRP's place in the bigger financial system because of how big the event was. This was true whether Coinbase was reorganizing custody, getting ready for new goods, meeting institutional demand, or just rebalancing, and that was the more important story in many ways. Not the sudden loss of what looked like 90% of shares in a snapshot of Blockchain Explorer, but the fact that such huge changes could happen at all. The technology behind XRP has grown up to the point where billions or even hundreds of millions of tokens can be moved quickly and easily. It's not a simple ability to have that. It's what Ripple has been pushing for more than 10 years. A world where information and wealth can move around freely. To fully understand how big this change is, it helps to take a step back. In the early 2000s, XRP was just another digital currency that was trying to stand out in the shadow of Bitcoin. While Bitcoin offered an alternative to central banks and Ethereum pushed for decentralized apps, XRP was quietly working on a different goal. It was going to connect all of the world's financial systems. It wasn't about making a separate economy from the ones that were already in place. It was about getting inside the streams that trillions of dollars already flow through. Today, we can see how that idea has come true in ways that many people still don't fully understand. RippleNet lets banks and payment providers process cross-border transactions in seconds, which is much faster and cheaper than the old SWIFT model. What's more, regulations are starting to become clearer. Even though it was painful, Ripple and XRP were thrust into the public eye by their long and rough fight with the SEC. It put cryptocurrencies through a test by fire that few others have been able to survive. After going through it, XRP has something very important: legitimacy, both in the eyes of organizations and regulators. That is exactly why the Coinbase change is important. If the exchange is moving so much XRP around, it means they are getting ready for a lot of action. This is probably more than the normal trades that regular buyers make. Institutional custody, ways to stake coins, ways to provide cash for money transfers, or even new financial goods. All of them are possible. Every one of them adds to the main story. It's not a toy to speculate with XRP, it's turning into plumbing for money. But this view doesn't take into account the steady, slow work that is being done. Unlike tokens based on memes, XRP isn't trying to go popular, it's trying to get the level, in the sense of the trillions of dollars that cross countries every day, not in the sense of exchange trades. That's why the similarity to Amazon in the 1990s is useful. Back then, not many people thought that an online bookstore would grow to be the main source of international trade. Today, not many people outside of crypto groups think of XRP as a basic layer for moving money. However, history shows that real movements are often underrated in their early stages. Now let's go back to the clue about Coinbase. The story changes if we don't see the movement as coins going away, but as coins being moved to make them more useful. It gives you a sneak peek of what's to come. Exchanges are getting ready to serve businesses as well as traders. In order to handle real-world settlement, liquidity pools are getting deeper. Custodial arrangements are changing to meet the needs of regulators. This is more than just looks. It's also about building. And once that framework is fully in place, small investors will not be the main ones who decide how much XRP is worth. The world will accept it. That's why it's so important to keep an eye on whale movements, exchange funds, and on-chain liquidity. These are the steps to adopting a child. It's not always a sign of fear when billions of XRP are mixed up. It could mean getting ready. When timing is everything, it's more important to understand why these moves happen than to look at a single chart trend. The market isn't just driven by usefulness, though, so let's also talk about psychology. They are moved by faith. Enterprise contracts from Ripple and custody plans from Coinbase are not available to the average user. They respond to news stories. They respond to pictures of wallets that look like they're empty. They respond to social media leaders who spread false information. In turn, that makes both danger and chance. Naturally, no study would be complete without talking about the people who don't believe it. They say that Ripple has too much XRP, that there are still risks of control, and that CBDCs or stablecoins could make it less important. These are good points. Still, it's important to remember, the business world isn't based on strict beliefs, it works by being efficient. If XRP can move money more quickly and cheaply than other options, then it's not about ideas why people buy it, it has to do with realism. Some coins, like stablecoins, depend on the health of the companies that issue them. There will be a lot of different CBDCs in each country. On the other hand, XRP is neutral. It doesn't have to answer to any one bank or government. This, along with the fact that it is neutral, fast, and cheap, makes it a perfect bridge. And bridges are more important than fortresses in a world economy. This gets us to the main idea. Infrastructure changes aren't always exciting, but they make a lot of money, like the backbone providers for the internet in the 1990s, the first cloud service providers in the 2000s, or the payment lines for mobile phones in the 2010s. At the time, none of these were hot. They were not taken seriously and were often forgotten. But the fancy consumer-facing apps we use every day would not exist without them. A lot of the time, XRP is like money in this way. It's not about the apps that make the news, it's about the tracks that let them happen. So where does that leave the banker? On the one hand, it's not clear what the next step should be. Rules are changing, competition is strong, and macroeconomic headwinds could make adoption slower. But the basics have never been better. It's not a question of whether XRP is useful. The question is whether the market will wait long enough to see it. And waiting has always been the most important thing that sets people apart. You got rich if you didn't sell when Amazon stock went down in the early 2000s, didn't freak out when Netflix stock went down, and didn't pay attention to the noise of Tesla doubters. Not hype, but confidence based on knowledge was the key in every case. That's why it's so important to look into things like the Coinbase change. They're signs, not just random events. They tell us where the smart money is putting its money, where the infrastructure is being strengthened, and where the quiet groundwork is being done. If history is any indication, those who notice early will be in the best place when everyone else finally gets it. There might never be a right answer to the mystery of Coinbase's XRP reserves, but that's not really the point. What's important is what it shows. That XRP is no longer a weird asset, but a real player in the world's money system. That billions of dollars can be moved in an instant, not as a bet, but as a way to get ready. And that the real story is going on quietly in the background while the news is full of excitement.